joining me on my market report. My name is Mike, and my market report's on mortgage rates. We like to do these videos on a daily basis and create videos that kind of explain what's going on with mortgage rates on those certain particular days, and kind of give you explanations as to if they're being affected by something on the economic calendar or headline news or geopolitical, or sometimes if the market changes, like the sentiment, that perhaps you may not realize that good news is now bad news and vice versa. And we're trying to get that information out to you so those who are following have a better idea of the direction where the mortgage rates are going and why they're doing what they're doing on those certain days. So a little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So if you're looking to refinance or purchase, we're here to help you guys out. We'd love to be able to assist you guys. But not only that, we're here as a resource. We're here to answer any questions you might have, whether it's something like mortgage rates or mortgage programs that might be available, or the process or anything. We're here to hopefully give you some guidance in those categories as well. So without further ado, we'll just jump right into it. We'll start off with the economic calendar, which happens to be pretty nothing to release today. Typically, a lot of times we do, but this week we'll have a little bit more data to report. This week, tomorrow we'll get the inflation on the wholesale side. It's kind of like the Rodney Dangerfield of inflation data. It doesn't always get all the respect, but with inflation on the mind, you never know how investors might react to it. This is the reason being that it doesn't always get that much respect is even though inflation may rise on the wholesale side, it doesn't always get passed off onto the consumer side. And that's really what we look at is what the consumer, and that's why we look at why it has more weight on the CPI and the PCE, especially the PCE, since that is the Fed's favorite gauge for inflation. We also got a lot of housing data coming out this week. We got some, so we'll see some housing data, and then a few manufacturing data will be coming out this week, and then retail sales on Thursday. So we'll get a lot more. So starting tomorrow on, we'll see a lot more data being released. Um, Headline news. Wow, where to begin? We'll start off with the Fed members. We had Esther George and Bullard speaking earlier today. They're both, for the most part, in more agreement. Bullard had mentioned that he'd rather see more front-loaded in terms of dealing with inflation. So it's not clear if he's supporting a 0.5% increase in the rate hike or not. Esther George kind of said that she said it's too soon to kind of make a determination as to doing a 0.5 point rate hike, but they both are in favor of course, reducing that balance sheet. So we may, and there's been a lot of other experts out there that kind of feel that the balance sheet will be more effective than the rate hikes in determining of the inflation, trying to fix the inflationary data that's out there as well. So we'll have to kind of wait and see what happens, but that will be taking place next month here, probably next few weeks. We'll see the FOMC meeting coming up shortly. So that had an impact, obviously, in the markets, their conversations. But the one thing that has been really driving the markets the last couple of days is the speculation or announcements that Russia will be invading Ukraine. Friday, we saw in the mortgage report about we were down quite a bit last Friday, but we ended up closing upwards, and I think we closed up about like 53 basis points or something like that, and that kind of helped us to regain some of the losses that we had the other day. So that kind of helped us out, and then yeah, we ended up closing up 53 basis points, so that was good. And then today we were down much further, but we have subsided some. So we see quite a bit. We start off down, and then went worse, and then we saw a lot of price for the worse, and then we got more news on the Ukraine that so subsided, came even improved a little bit, like down 20 basis points. Now we're kind of working our way down, so it's real choppy today. It's going back and forth, back and forth. But in regards, what was going on is that they actually set a date at this point when the Russian forces may invade, which was like the 16th is what I'm hearing. That's the difference from the news on Friday and today, that there was actually a date being announced. And then also satellite images showing Russian forces moving into attack mode, basically moving into what appears to be basically they're going to be coming in and attacking Ukraine. So again, as we wait for more news and how the markets react, we'll see. But for the most part, that's helping. That would help bonds primarily because that money we're as a flight to safety. So The stock market, with it going downwards, that money typically goes into bonds and yields and treasuries as a flight to safety to kind of protect their money, so they kind of as being conservative investment. So they'll put their money into there, and that helps us out with our pricing. But today we're down about 33 basis points, so our pricing is worse than what we left off on Friday from what we saw as a result. So hopefully this kind of helps. Today's this is kind of really choppy. It's going back and forth. So we're getting prices for the worst and we're getting prices for the better. But it's been up and down quite a bit, fluctuating so much that it's going to be really hard to determine where we end up at the final result here. Stock market is kind of dictating it, probably because money's been coming out of it and going back into the bond market. But we'll have to kind of wait and see what's going on. But today, again, it's been real choppy, going back and forth, a lot of volatility. So it's going, again, positive. It will improve some, then it will worsen some again. So as you see, it just went down to 35 basis points here, down, as we've been talking here the last minute or so. All right. Lastly, let's go ahead and take a look at what the national, what the average rate is for a conforming loan limit. We'll start off with the 30-year fixed, and that is at 4.05 now. So as you know, we hit the 4% range here, and these do have points built into it. And the 15 years now at 3.31 now. Again, these do have points built into it, and these are the averages out there. So if you guys want a rate quote, please reach out. We're here to help you guys out with that. We'll be more than happy to give you a quote as well. Hey, if you like these videos, please help us out. Smash that like button and share us. We greatly appreciate that. Any support you can, we greatly appreciate. We thank you very much for your time, and we'll look forward to see you guys on Friday. I'm sorry, not Friday. We'll see you guys tomorrow. My bad. I'm already rushing this week ahead. Have a great rest of your day. Bye-bye.